Hi candidates, welcome to another session of Manifested Online classes. My name is Joseph Kimani, your lecturer for Advanced Financial Reporting and Analysis. So in this session, I want us we start or basically look on topic number 5 in this particular unit called Advanced Financial Reporting and Analysis. And the topic is Public Sector Accounting Standards. And basically, this is an extension of what you covered in financial reporting and analysis because you did a similar topic. And what you're going to cover as far as this particular topic is concerned are various international public sector accounting standards. So we are going to look on IPSAS to do with the segment reporting. We're also going to look on another IPSAS to do with the related party disclosures, what now the public sector entities should disclose relating to transactions with the related parties. Also, we're going to look on another two standards there, or basically two other standards there, IPSAS 21 and also IPSAS 26, which deals with the impairment of cash generating asset and also impairment of non-cash generating asset. And then from there, we also look on something to do with the disclosure of information by the general government sectors, the information to be disclosed by the public sector entities. And also we look on something to do with the consolidated or the preparation of consolidated financial statement by public sector entities. And then we also look on how to account for the investment in associate and joint venture. So basically in that topic number 5, we are going to look on 5 subtopic. And basically those particular 5 subtopics, as we are going to see, they are governed by different IPSAS or by different international public sector accounting standards. So I want us we go straight to the first standard here, that is IPSAS 18. But even before we look on that, it is important first of all to recall that when we talk about public sector accounting, this is basically the process through which now the public sector entities prepare their financial statements. So what are public sector entities? So these are those particular entities which are usually accountable to the members of the public. These are those particular entities which provide services to the members of what? Of the public. And those entities include, number 1, the parastatals or the statutory corporations. Number 2, we have the county government. We also have the central government. And also we have what we refer as charitable organizations. So all these particular entities, they fall under public sector entities, and they are expected at the end of each year to prepare their financial statement. Basically, they should do that in compliance or basically in accordance with that with certain standards which are known as international public accounting standard. So I want us to go straight to the first standard here, which we need to cover under this particular unit here, that is Advanced Financial Reporting and Analysis, and that is IPSAS 18. Now, this particular IPSAS 18 is drawn primarily from IFRS 8, which is one of the subtopics which we have already covered. And this particular standard here, that is IPSAS 18, it requires the public sector entities to be able to identify their segments, of which in this case, when we talk about a segment of public sector entities, we are talking of distinguishable activities or a group of activities undertaken by public sector entities. So once a public sector entity has been able to identify its segment, then it should go ahead and basically provide separate information about those particular segments. So at a later stage, we are going to look on how these particular public sector entities prepare the segment report in accordance with the IPSAS 18. But even before we do that, we can look on the introduction to this, and we say that IPSAS 18 requires public sector entities to identify distinguishable activities all group of activities as segments or as reportable segments, segments, and provide, or in other terms you can say, or report their financial information. Information. So basically what that means that any public sector entity, be it a county government, be it a parastatal, basically the national government, it is required by this particular standard to be able to identify its segments. And in this case, we are saying the segments of these particular entities will be what? Will be distinguishable activity. For example, if a parastatal, even as a county government is undertaking a certain activity, then that particular activity we can say it is what? It is a segment. So therefore, once now those particular public sector entities identify now the segment which you are saying are distinguishable activities or a group of activities, then such an entity is required now to proceed and provide separate information about those particular what? Activities. So which information should be provided as far as these particular activities are concerned? The information to be provided include information to do with the segment revenue, the revenue for each segment, the information about the segment expenses, and also asset and liabilities of each what? A segment. But we are going to look on that in details when looking on the format, or basically how a segment report is prepared under what you refer as IPSAS, IPSAS 18. So then from there we can define what is a segment under IPSAS 18. So let's look on the definition of a segment. So first of all, it is important to note that a segment here is defined differently from how a segment is defined under IFRS 8. If you can be able to recall, we defined an operating segment under IFRS 8 as a component of an entity, number one, which engage in business activities from which it earn revenue and also incur cost. Number two, it discrete or basically separate financial information is available. And number three, we said its operating results is regularly reviewed by the entity's chief operating decision maker. Number one, for him to be able to assess its performance, and number two, to know the resources to be what? To be allocated. That's how we defined an operating segment under IFRS 8. But under this particular standard here, that is IPSAS 18, a segment here is defined to be a distinguishable activity or a group of activities by a public sector entity, and basically which must be reported on. So therefore you can say that a segment, this is a distinguishable activity or a group of activities, of an entity, for which it is appropriate, to separately report its financial information, for two purposes, or basically you can say for the following purpose, So number one is basically to evaluate the entity's past performance. Number one, for evaluating the entity's past performance, in achieving its objectives, and number two, for making decisions, decisions about future allocation of resources, future allocation of resources. Yes. So basically that is the definition of a segment at IPSAS 18. And we are saying if you compare this particular definition here with a definition of an operating segment at the IFRS 8, you can be able to see there is a difference. And therefore, it is important to note that because mostly you may come across a question whereby the examiner has or requires you to differentiate or basically to define an operating segment at the IFRS 8 and also at the IPSAS what? At the IPSAS 18. Now, in this case, we have two types of segments. So we can talk of types of segments. Segments at IPSAS 18. So IPSAS 18 generally classifies segments into two. Number one, we have something called the geographical segments. And number two, we have what referred as the component segment. Or in other terms, we can just refer to this as a activity component. So basically is a type of a segment which provide certain types of activity. So therefore IPSAS 18 basically classifies now the segment into those two categories. So then from there what I want us we do is basically we look on how a segment report is presented or is basically prepared under this particular standard here. So let's look on the format of a segment report. Format of a segment report. And equally in terms of how we prepare the segment report at IPSAS 18 is also quite different from the format which is used at the IFRS 8. So therefore let's look on that particular format here. So in preparing this particular segment report at the IPSAS 18, first of all, we have the details column here. Followed by columns equal to the number of segments. So, and remember what you have said is that when talk about the segment here, at the public sector entity, we are talking of a group of activities or distinguishable activities. So mean that you can be given a segment to be something like the primary services. Also maybe you can be given something like the secondary services. Undertaken by a public sector entity and maybe other services. So we assume that that particular public sector entity undertake those three activities: primary services, secondary services, and then we have other services, which now shall be regarded to be what? To be segment. And then we have another column here for elimination. And basically this column is for eliminating any intersegment transaction such that that transaction will not go to the last column, which automatically is the total column. So those basically should be the number of columns you have: the details column, columns equal to the number of segment, the elimination column, and the total or the consolidated column. So what do we start with here? So always we start by recording the revenue. Of each segment. And this revenue for this segment can come from various sources. Number one, we have the revenue which comes from the budget appropriation. So basically when we talk about appropriation, this is basically the money which is allocated to a public sector entity to be able to provide various services, and this money is allocated from the consolidated fund. So we get the total here, and basically because this is an external source of revenue, we take it to the last column. Then we also have things like the other source of income, which may be fees, from external services. So this is basically the amount of money collected by a public sector entity from the services it provides. Anytime you go to a government department like immigration department, the RAD department, and so on, so you're looking for some services, you're usually charged a small fee. So basically, this is still an external source of revenue. We take it to the last column, and then from there we also have something called the inter-segment transfer. So when talk about inter-segment transfer, this is basically money which is received by one segment from the other, or basically this is an internal source of what? Of revenue. So what we do, we get the total and we put it here as a negative because that is an internal source of what? Of revenue. And then from there, we come and we get the total segment revenue. We get the total segment revenue. This one we underline it. And you have to remember that this total revenue will basically comprise the internal and also what? The external sources of revenue. So in the elimination column, what we do is that we eliminate now the total inter-segment what? Revenue, such that the revenue now which we take now to the last column, this one, this only comprises of the external what? Of the external revenue. And this particular amount which is here, we don't underline it because we use it down here in terms of computing the surplus or the deficit for what? For that period. So after recording now this information about the segment revenue, so we proceed and we record information about the segment expenses. The segment expenses. So the expenses of the segment may include things like salaries and wages. Salaries and wages. So we record that here and take into account this is a cost or basically an expense. So when recording it here, we record it as a negative. So we also record other expenses such as what? Such as the depreciation. Such as the depreciation on property, plant, and equipment. Property, plant, and equipment. And so on, and any other expense. And then what we do, we get the total expenses here. We get the total expenses. And then what we do is that this particular total expenses, we take that now to the last column, such that we less that now from our total revenue. We less that from the total revenue. And whatever you get there will be a surplus or basically the deficit from the operating activity. So what the name given to that is, remember, first of all, these are total expenses. These are total expenses. So whatever you get here, it can be a positive or basically it can be a negative. So if it is a positive, we refer to that as a surplus. We refer to that as surplus or basically the deficit. If a negative deficit from operating activities. From operating activities, or in other terms, from operation. We also have to recall that these particular public sector entities do not operate with an objective of making profit. So therefore, the difference between the revenue and the expenses is not a profit or a loss. It is basically a surplus or what? Or a deficit. So therefore, we are saying a positive figure here is a surplus, whereas now a negative figure is what? Is a deficit. And then we proceed and to this we do what? And in some cases you can also be given something called the unallocated central expenses. So if you're given unallocated central expenses, you also come and capture it here before computing that surplus or basically the deficit for the period. So you can be given unallocated central expenses. Unallocated central expenses. So basically these are the expenses incurred by a public sector entity, but not directly attributable to a certain what? Segment. So we take it to the last column there, and then what we do, we get the surplus or the deficit from operation. From operation or basically from operating activities. So I've said if it's a positive, is a surplus, but if a negative here is what is a deficit. And then to this particular amount here, we come and we add something called the interest income. Remember, this income here is not from operation, so that's why we are adjusting it from the to the surplus or the deficit from what? Operating activities. And then to this we also less the interest expenses. Which is still not an operating expense. So basically, this is expense which will be incurred by a public sector entity as a result of having borrowed some what? Borrowed some finances. So interest income, we add it, whereas now the interest expenses, what we do, we basically less that. We less that from our surplus or deficit, and then from there what we do here, we get the surplus or the deficit for the period. Or basically for the year. So whatever you get here, if a positive is a surplus, if a negative is what? Is a deficit. And then next, now we proceed and record information about the segment assets. Assets. So basically we record asset of each segment here. Remember, in our case we have three segment here. The primary services, secondary services, and then we have other services. Get the total, take it to the last word, a column. And then to this, you may also be given central unallocated assets. So these are basically those particular assets which are owned by this public sector entity. But these particular assets, we cannot say that they are directly owned by a certain what? A segment. So therefore, to this, what we do is that we add central unallocated assets. Central unallocated what? Assets. And basically unallocated asset, take into account these are assets not identified with a particular segment. So we don't record that at the individual segment, but we take that now to the last column there. And wherever you get here is the consolidated what? Asset. So finally, after recording information about the assets, we record the information about the liabilities. So mean that next we record information about the segment liabilities. So we record liabilities of each segment here. Primary services, secondary services, and other services. We get the total. We take it to the last column, which is now the total or the consolidated column. And equally here, we also add unallocated central liabilities. So basically, these are the liabilities of this particular public sector entity, but not identified with a particular segment. We get the total here, which we refer to as the consolidated liabilities. Or in other terms, the total what? Liabilities. So that's basically how we present, or basically how we prepare this particular segment report at the IPSAS 18. And equally, you can see that we have a slight difference in terms of how we prepare a segment report at the IFRS 8, because we have already looked on how we prepare a segment report at the what? At the IFRS 8. That is International Financial Reporting Standard number what? Number 8. So therefore, that is it. And I think with that, we can be able to look on an illustration question regarding the preparation of this particular segment report. So let's go through that particular illustration. We see what we are told, and equally what the examiner was requiring. Yes, so the question reads, the following information related to the Ministry of Trade and Industry for the fiscal year 2013 and 2014. So we are given a number of services there: primary services, tertiary services, special services, and other services. Remember what you have said is that as per IPSAS 18, these particular services which are provided by this Ministry of Trade and Industry, these are segment. These are what? Segment, because you have defined a segment to be activity or basically distinguishable activity or a group of what? Activities. So what you're given there, we're given the segment revenue, or basically the revenue for each segment. We have the money which came from the appropriation, or revenue which came from budget appropriation, as fees from external services, and then we have the inter-segment transfer, and then we have the segment expenses, which include salaries and wages, depreciation, other expenses, and then we have information about asset and liabilities. Then we have some additional information about whereby we are given unallocated central expenses, which amounted to 70 billion. Number 2, we are given interest and also interest expense and interest revenue, which amounted to 20 billion and 40 billion respectively. And number 3, we are told unallocated central assets and unallocated liabilities amounted to 350 billion and 400 billion respectively. So we have that particular information, and what now the examiner is requiring is we prepare a segment report which is consistent, or basically consistent with the requirement of IPSAS 18, which governs now the segment reporting for the Ministry of Trade and what? Industry, to be included in the financial statement of what? Of the ministry. So what we are required to do as far as that particular question is concerned is we prepare a segment report. Remember, we are going to prepare that particular segment report using this particular format which we have done what? Which we have already covered here. Yes, so we should start now here with the title of whatever we are preparing. So we start with the name of the ministry, and basically we are told that this is the Ministry of Trade and Industry. Ministry of Trade and Industry. What we are required to prepare is a segment report. Segment report for this particular ministry, which is for the fiscal year. For the fiscal year 2013-2014, 2013-2014. So what do we need to, or how do we prepare this particular segment report? Remember, I've said always we start with the details column, and basically columns or followed by columns equal to the number of segments which are given, and then we also have elimination column and the total column. So therefore, we are going to leave some space here for recording our details, and then in our case we are given a number of segments here which include primary services, and also our figures are given in billion of shillings. Then we have tertiary services, then we have special services, and then we have other services, and basically therefore this will be our four segment. And then next we have the elimination column. And then we also have the total column, and our figures here will be in billion of shillings. So this is the elimination column, like that. So what do we start with here? We always start by recording the information about the segment revenue. And that information is given to us in our question there. So basically we have three sources of revenue. So we have the revenue which came from the budget appropriation. So we record that particular information here the way it is given. We have 480, we have 400, we have 220, and then we have 230. So basically, we're going to get this particular total, and we take it to the last column there. But before we do that, let's record the other source of income, which is fees from external services, which is still an external source of revenue. We have 50 billion, 40 billion, 20 billion, 60 billion. Equally, we're going to get the total. We take it to the last column. And then we also have now the inter-segment transfer. Inter-segment transfer, in this case, we have said that this is an internal source of income. We have 100 billion, 60 billion, 60 billion, and then 70 billion. So because this is an internal source of revenue, so what we do, we get the total, and then we do what? We eliminate it in that particular column there, which is known as the elimination column. So what we need to do here, let's get these totals. Let's get these totals, because also here we need to have the total revenue for each segment. So we get the total revenue for all the segments. So let's first of all get the total revenue from budget appropriation. So we have 480 plus 400 plus 220 plus 230. 230. So which is giving us a total of 1330. And because this is an external source of revenue, we take it to the consolidated column. We take it now to the last one, column, which is also known as the total column. The same case with the fees from external services. This is still revenue from external sources. So once we get the total, we take it to the last column, which is the consolidated or the total column. So we have 50, 40, 20. And then finally, we have 60 billion. So which will give us a total of what? 170. So and then we have the inter-segment transfer, which you have said is an internal source of revenue. So we have 100 plus 60 plus 60 plus 70. So this one we record it in the elimination column here as a deduction, such that once we add across this particular revenue there, it will not go to the last column, because we have said what we record in the last column there is only the external or basically is only the revenue which come from the external what sources. Any revenue from the internal sources, like transfer from one segment to another, that one should not be recorded in the total or the consolidated what column, because this is basically like a transfer. This is not a revenue, but rather it is a transfer from one segment to another, or maybe from one government department to another. So and then what we need to do, we need to get the total revenue for individual segment. Starting with the primary, we have 480 plus 150, which will give us 630. The same case here, this will be 500. The same case here, this will be 240, 300, 300, 360. And then we eliminate the internal source of revenue, because this is the external and also internal. So in the elimination column here, what we do, we eliminate now the internal revenue, such that what we have in the last column here, which will be 15, this only comprises of revenue from external what sources. And basically what you have said is that whatever you get here, don't underwrite that, because you're going to use that figure down here when computing the surplus or what the deficit from operating activities. So having done that, having recorded now the revenue, we proceed and record information about the segment expenses. Segment expenses. So in our case, we are given that information. You just need to bring it here in our segment report. So first of all, we have salaries and wages. Salaries and wages. We have an amount of 390, 310, 130, and then we have 130. There is something I said that because this is a cost or this is an expense, when recording it here, we record it as a negative. Yes, so then from there we have depreciation. We have depreciation. Depreciation, we have 90, 70, then we have 50, and then we have what? 70. Okay, so then finally we have other expenses. other expenses, we have an amount of 120, we have an amount of 110, we have an amount of 100, and then we have amount of what? Of 90. So then from there, what we do, we get the total segment expenses. So let's get the total segment expenses. Total segment expenses. So basically by adding the expenses of each segment here. So we have 390 plus what? Plus 90 plus 120. So we have 390 plus 90 plus 120. 120, basically that will give us 600. So then here we have 310 plus 70 plus 110, which is 490. And also we have to remember to record this inside the bracket as a negative figure because it's an expense. So here we have 130 plus 50 plus 100, so which will give us 280. And the last segment we have 200, 290. 200, 290. And then what we do is that we come and we add these expenses here. You see the total expenses for each segment. Then we have to add all these. Whatever we get, we take it to the last column so that we less that now from the total revenue of each segment. So let's do that. So we have 600 plus 490 plus 280. 280 plus what? 290. So that will give us a total segment expenses of what? 1660. And before we deduct that from the segment, total segment revenue, there is another information which is given in the additional information number 1, whereby we are told there was unallocated central expenses. These are still the expenses of the segment, but they have not been identified with individual what? Segment. So what we do here, remember there is a figure of 1660. So we also come and capture those particular central unallocated expenses, or basically unallocated central expenses. We are saying that these are expenses not identified with a particular segment, and we take that now to the last column, which is 70 billion. So and actually we less the two expenses from the revenue there, and whatever you get here can be a surplus or a deficit from what? Operating activities. And basically in our case, I think we're going to have a negative there, which is basically a deficit. If we get a negative figure, is a deficit from operating activities. From operating activities. So how much will be that? So we have 1500 minus 1660 minus 70. So and basically that will give us negative 230. Negative 230, which is basically what? A deficit from operating what? Activity. So after getting that, then I've said we adjust a particular deficit or surplus with now interest expense and interest what? Revenue. And in the note number 2, we are given interest expense and also interest revenue. So what we need to do first of all is we add interest revenue. Interest revenue, and basically that interest revenue is given as a total figure. So mean that this has not been identified with a particular segment. The interest revenue here is 40 billion, which we add there, we add here 40 billion. And then we also have now the interest expenses, which we less. Interest expenses. And equally, you can see here we are not given the interest expense for individual segment, but we are given the total. So we take that now to the last column, which is a figure of what? Of 20. And basically we less that now from our what? from our deficit from what? From operating activities. So whatever you get down here will be the deficit for the period. So we will refer to that as deficit for the period. So how much will be the deficit for the period in this case? We have 230 billion plus 40 minus 20. So this will give us a deficit from or for the period as 210 billion. 210 what? A billion. So next we proceed and record information about the segment asset, and then the segment what? Liabilities. But always we start by recording information about the segment assets. So I think we can do away with whatever you have here so that we can record information about the segment assets and segment liabilities. Yes, so let's first of all record the information about segment assets. So, and that is still given at the paragraph 1, whereby you're given the segment assets for each segment: 540, 500, 340, and then we have 300. So basically we get the total, we take it to the last column, and then to this there is something which we add, which is given in note number 3, and that is unallocated central assets. Unallocated central what? Assets. So these are basically those particular assets not identified with any segment, and such assets we record them in the last column here. In the last column here, which is a figure of 350 billion. And then what we will get here are the consolidated assets or the consolidated segments assets. So let's get this total here. We have 540 plus 500 plus 340 plus 300. So that will give us a total of 1680. So we add 350 plus 350, which will give us consolidated assets of 2030. So next we record information about the segment liabilities. We need to record information about the segment liabilities here. We record information about segment liabilities. And also that particular information is provided in our question here, is provided in our question there. So the liabilities for the first segment are given as 250. We have 150, we have 80, and then we have 110. So what we need to do, we get the total, we take it to the last column there, and then to this we also add what you're given in note number 3, and that is unallocated liabilities. Unallocated liabilities is those liabilities not identified with a particular segment. And we are given those particular liabilities as an amount of 400 billion. And then finally, what we do, we get the consolidated liabilities. So let's first of all we get the total segment liabilities. We have 250 plus 150 plus 80 plus 110, and that will give us a total of 590 billion. And then we add that now to the unallocated liabilities of 400, which will give us now the consolidated liabilities here to be how much? To be 990. Remember, we have said that this now will be what? Will be the consolidated liability. So basically that is it. That what was required as far as that particular question was is concerned. So the examiner was requiring the preparation of a segment report in compliance, or basically in accordance with IPSAS 18. And basically, that's what you need to know as far as that particular standard is concerned, and that is IPSAS 18. For now, is a bye. See you in the next session.